Welcome, traders. Today is July 15th, and we are bringing you our daily recap for the day. Now, lately, the market has been really slow in comparison to last week. We're not getting a lot of momentum. We're not getting a lot of news. We're not getting a lot of tickers who are moving really fast for us to capitalize on. Today, the only stock that was moving, that was worthwhile to trade, was ERNA, ERNA. If you break down this chart, you can see that it made a push from about $6.33 all the way to $12.83. That's a 100% move. Unfortunately, as you can see from the chart, it rolled over and it faded back roughly to where it started. Now, ERNA, if you really break down the news, it's actually a very bad company to trade. I know a lot of momentum traders will take advantage of this push, but in reality, for a long-term play, this is actually a really weak company. So let's break down the news. They gapped up and they made the surprising push in the morning because they had a 67% tumor clearance. Now, this was just achieved on 15 mice. And in science, I did some research on this. The move from mice to human trials, success rate is only less than 10%. It's about a 90% failure rate. And ERNA 101 is their monotherapy, literally has a 0% efficacy on its own study. So I didn't trade the morning rush. You can't really trade this because in the morning, if you don't have a lot of tickers moving, a lot of traders are going to get antsy. And if this is the only stock that's moving, they are going to jump in on this one. Long or short, it doesn't matter if they're going to make any money or not, but they are going to look at this stock and trade it. So with that in mind, you have to realize that this is not going to be a clean action. It doesn't matter if they're going to buy or sell, or if long term this is strong or weak. What you have to realize is context. And the market conditions are telling you that there is nothing else moving. So, with nothing else moving, all eyes are on this stock. And this push here trapped a lot of breakout buyers. Because if there's nothing moving, and this stock only has about 600,000 flow, very low flow, the potential for this to run 100, 200, 300% is a lot higher. Unfortunately, this was the wrong stock for it to actually run. So in February of this year, ERNA had a $10.5 million public offering. And then in April of this year, so 3 months ago, they announced a 25-to-1 reverse stock split. And if you look at the daily chart, I mean, it looks so ugly. This company is bleeding money. This play here, my thought process was it's a classic pump and dump. The company is churning some good news and they're trying to sell it and trap retails. But in terms of actually trading this, you can't really trade this yet because after this huge push here, you see, it comes back down. And then you can see another liquidity grab, another push and fade. Now, you have to understand that this grind down, so I'm going to draw it again. This grind down right here, look how compressed it is. Look how small these 5-minute candles are. It's like a spring winding down. Like it's slowly taking you for a ride and is slowly churning you out. Now, don't get me wrong. This was not easy to trade. The spread was high, the borrow fees were high, and this grind down, it'll grind up from $10 to about $8.30s. $1.70. It's a relatively large amount, but it was such a slow grind and it was really, really hard to trade this area. So I'm predominantly a short bias trader. I can't short this because if you look at these candles, the bodies are so small. And look what happened in the opening market. 850 to a 970. So these candles here, well, $9 to about 860s, about 20, 30, 40 cent candles. But on these green candle pops, especially when the market opened, it went from 850 to almost $10. So with that in mind, I had to wait. And it's always the best thing you can do if you're not sure. So I knew this company was relatively weak, it was bleeding cash, and it was going to fade. But when you're trading penny stocks, you don't know when it's going to fade. And that's the biggest if. I waited. I knew that once this 920 broke, it was going to flush out a lot of people. It initially broke down, but this broke down on such a slow grind. It was so slow and deliberate. I don't believe, or at the time I didn't believe that it was going to take out enough long traders. Like this slow grind here, it wasn't enough to clear all the bag holders here. And this opening push did it. This opening push from about $8.50 to $10 to $9.90, obviously rejecting $10, was showing the traders that, hey, we're rejecting $10. This is practically your last chance to exit. And immediately after, it flushed down. And you can see what happened. This is the 1 minute chart. I made a little dip, a push, pull back, push into 990s, and then it slowly rolled over. I got in roughly around $8.85, I believe. So I shorted in two spots at 810 on the breakdown and about 940. So I took a try in this area here, and once it rolled over, I added in this pocket right here. So my entries was somewhere in this area here, and I added after the confirmation in this area here. My exits around the breakdown below $8. I didn't really want to wait. There wasn't too much moving in the market today. So I exited around 810, I think because it actually went down and popped back up. And most of my exits were in the 780s and 790s. And from this move here, from this move alone, I managed to grab $1,000 today. So this is about 810. This was 750, I believe. And I exited on this breakdown most of my position. Initially, after this breakdown, I had a 940 average. I got out at 813. And then when I realized it was going to continue breaking down, I added. And then I got out. So to me, this was just a quick scalp. It was not a trade that I wanted to hold just because I didn't quite understand what it was going to do. I knew it was weak, but I have a very specific set of criteria of how I like to manage my trades and the type of moves that I'm comfortable with. This, to me, I was not comfortable with. Now, granted, I could have held my position. I got in around 880s average, so I could have held until it broke down to $6 or below the breakdown below 7, but I wasn't sure what was going to happen. And I didn't want to get stuck in a slow grind up. Usually with these type of stocks, after you get a big flush, they slowly grind up or they go sideways. You can see there's a big bottoming tail here and it popped back up. So this stock, although it came back to $6 and you're watching this after the fact, it was not an easy stock to trade. So that's the only stock I took today. And from that move, average 880s, average exit 780s, had about 1,200 shares, and that got me about $1,000 green today. I'll show you my actual chart. I was watching SOBR as well, but I didn't end up trading this one. ERNA. You can see the lines I drew. I made $1,023 today. Close position, average entry, 875. This is a 940 entry and an 810, somewhere in that ballpark. Average, 875. Average exit, 790. So I will show you everything. Yeah, 810, 640. I'm not sure why everything's mixed up right now, but 813, 780s, 780s, and yeah. So that's my trade. It was a quick scalp. I mean, this one, the borrow fees were getting really high. $85 in borrow fees, $7 in commission. But overall, I mean, the market is slowing down. So we have to keep that in mind. I can't go gung-ho and just pile in on these shorts. You need to be mindful of what's going on in the actual market. If there's a lot of stocks going up and down, then attention and traders are going to be spread out. But in a relatively slow market, which is what we have this week, where nothing is really moving, and you only have a few stocks that are really, really moving, you have to keep in mind, day trader is going to be watching the same stock. And if they're all watching the same stock, you won't get that clean move because it actually pushed up 100%. So anyways, that's my trade for today. That's my recap. It's a slow market, so we're going to keep this one short. $1,023 green today. So that's all for today. Hopefully tomorrow we will have better trades and better moves. But even if we don't, that's okay. We just have to be mindful of the market that we're in. Thank you for watching, and I'll see you guys in the next one.